Are you looking for a ways to easily invest in the stock market without having to go through the hassle of doing a lot of research and picking winning stocks? Well, don't go any further, because in this video, we're going to be taking a look at 5 outstanding exchange traded funds that allow you to invest in the stock market without having to pick and choose any stocks. These dividend ETFs do have very low cost to buy, and they have certain advantages, such as by owning exchange traded funds, you actually can easily buy them at zero to minimal fee through common brokerage accounts. Let's get into it. We'll take a look at 5 outstanding exchange traded funds that are offered by Vanguard, and these are all available in Canadian dollars for investors here in Canada. 2 of these ETFs are investing in companies merely in Canada. 2 of them are getting you exposure to companies in the US market, and 1 of them actually gives you exposure to international market. The first ETF to review is called VCE FTSE Canada Index ETF. It is traded with ticker symbol VCE on Toronto Stock Exchange, and you'd notice that it has a low fee of 0.05%. What this fee entails is that if you had invested $10,000 into this fund, you'd be only paying $5 annual fee, which is quite remarkable and very, very low fee for the diversification that you get to this exchange traded funds. In terms of the dividend and distributions here, for VCE, they do pay currently a 12 months yield of 2.75%. It's almost equivalent to a quarterly dividend with an annual yield of 2.75%. Let's take a look at the VCE and what this fund is all about. Vanguard FTSE Canada Index ETF seeks to track, to the extent possible, the performance of a broad Canadian equity index that measures the investment return of publicly traded securities in Canadian market. It gives you that exposure mostly to larger sized companies here in Canada. Now let's take a look at the return of this ETF and its performance. You notice here that the 1-year return for VCE is showing to be at 28.50%. The 3-year return annualized is at 18.14%, and the 5-year annualized return is at 10.62%. This fund has been around for a longer period of time, which is why you have also the 10-year return. The annualized 10-year return is showing to be at 9.54%, which is remarkable. The inception date for this fund was at 30th of November of 2011. The return since inception, had you bought into this fund since the very day it was incepted, still you would have seen an annualized return of 9.22%, which is quite remarkable. There is a graph here on the website for Vanguard that you could see, had you invested 3 years ago, 5 years ago, or 1 year ago, $10,000, how much your money would have grown. I'll definitely be sure to leave a link to these sources so you can check it out yourself and play around with it. Let's take a look at this fund in more detail, what it entails and what type of stocks you would be getting exposure to. Here with VCE, you are getting exposure to 53 Canadian stocks. These are mainly considered to be large cap companies. You notice here, close to 94% of funds here are large cap, with a smaller portion, only about 3% getting exposure to medium to large and 2.8% to medium sized company. You don't get much exposure to small or medium small companies here. Let us take a look at the underlying holdings. 100% of your investments would be to Canadian stocks. The 53 Canadian stocks that you get exposure to through VCE are invested in a multitude of sectors in the stock market. As we noticed, you'd see around majority of the exposure is actually to financial sectors, close to 41%. Energy is the second largest sector exposure with about 14%, followed by technology at 12.8%. You also get exposure to basic materials, industrials, telecommunications, consumer discretionary, utilities, consumer staples, and a little bit of healthcare sector exposure. If we look at the holdings here, the largest holding for VCE is Shopify. as you notice, you have 9.8% of this fund is invested in Shopify, followed by Royal Bank of Canada, Toronto Dominion Bank, Enbridge, Bank of Nova Scotia, Canadian National Railways, Brookfield Asset Management, Bank of Montreal, Canadian Imperial Bank of Commerce, and Canadian Natural Resources. These are your top 10 holdings for VCE. Now, the second ETF for us to review is VCN, or FTSE Canada All Cap Index ETF. Here, unlike VCE, you are not merely exposed to large capital Canadian stocks, but actually you get exposure to medium as well as small sized companies. That's why we call it an all capitalizations. The management fee is similarly very low at 0.05%, and it does pay a quarterly distribution, currently yielding at 2.54% annually. If we look at the funds a little bit in detail and get some insights, here you are getting exposure to large, mid, and small capitalization, publicly traded Canadian market stocks. So let's take a look at the past returns of this fund. You notice for VCN, the 1-year return was at 25.61%. The 3-year annualized return was at 17.20%. The 5-year annual return was at 9.65%. The return since the inception of this fund was at 9.28%. You don't have the 10-year annualized return, given the fact that this fund was incepted in less than 10 years ago. In fact, it was incepted on August 2nd, 2013. Similar type of graph here that you'd see how your funds would have grown in the past 5 years, 1 year, as well as 3 years. For instance, if you had invested $10,000 5 years ago into this fund, by now it would have grown to over 15,000, close to 16,000, $15,859 to be more accurate. The exposure, while majority of your funds, or about 183 funds that the stocks that you're getting exposure to are invested in large cap companies, around 74%, you are getting a little bit more exposure to small, medium, and medium large companies. The largest holding here, similarly to VCE, is Shopify. It's 7.65%, followed by Royal Bank of Canada, Toronto Dominion Bank, Enbridge, Bank of Nova Scotia, Canadian National Railways, Brookfield Asset Management, Bank of Montreal, Canadian Imperial Bank of Commerce, and Canadian Natural Resources. Well, many of the top 10 actually are exactly the same as the ones that we saw for VCE. The market weight for them is lower because here you're going to get exposure to close to 143 different stocks versus only 53 that we talked about earlier on. The other point that I wanted to bring to your attention is the sector diversification. Here, the change that you see that those weight changes. For example, there's less exposure to financials, down from about 40 or plus percent that you got in VCE, and for VCN here, you get only about 33% exposure to financials. The next top sectors exposures are energy, technology, basic materials, industrials, that are all 10% or above, followed by the rest of the sectors here, the stock market sectors that you get exposure to, as you see based on the breakdown provided here. Now, with these two ETFs out of the way, we're going to get into Canadian ETFs that invest in US stock market. The next one is what we call as US Total Market Index ETF, with ticker symbol VUN. It does have a slightly higher management expense ratio of 0.16%. That means if you had invested $10,000 in a year, you would pay $16 in fees. It does pay a distribution quarterly, though it is less than the other ones we talked about. Here's the focus is more so on growth and not so much necessarily on a dividend. And it does have a distribution of 0.92% at this time based on the 12 months yield. Here, you are getting exposure to primarily large capitalization US stocks, and mainly through the Vanguard ETF that's available to you. Let us take a look at the past returns. The VUN 1-year return was at 24.41%, 3-year annualized return was at 22.32%, and 5-year annualized return was at 16.11%. The fund has not been incepted more than 10 years ago. That's why you don't have the 10-year annualized return. In fact, it was incepted on August 2nd, 2013. And the return since inception for this fund is at 17% annually, which is just remarkable for an ETF. Think about it. You don't have to pick a winning stock. You don't have to worry about it. You just invest through this ETF, which is a high quality ETF, does pay some distribution, but safely over time, your funds and investments are going to grow. If we look at the breakdown, here you're getting exposure to close to 4,200 different stocks in US stock market. To be exact, 4,156 stocks. Majority of them are large cap companies, close to 70%. Medium large companies forms about 4% of these holding, followed by medium at 12.65, medium small 5.72, and small size 7.54%. A little more diversification in that sense. Pretty much all of the funds are in US companies and US stocks. In terms of the sector breakdown, here the largest sector exposure is to technology with close to 30%, followed by consumer discretionary, industrials, healthcare, and financials. You still get some exposure to the rest of the financial and other stock market sectors. We have made a video here on this channel talking about the 11 different stock market sectors that you can invest in and get exposure to. It's really a good video to learn more about diversification and its power. I'll leave the link to that video in the description of this one so that you can easily find it out and check it out. If we look at the specific holdings, top 10 holdings for this ETF, you are getting exposure to Apple as the largest holding exposure with 5.5%, followed by Microsoft, Amazon, Tesla, Alphabet or Google, Nvidia, Alphabet Class C, Facebook or Metaverse, Berkshire Hathaway, and JP Morgan. Next, we're going to be taking a look at VFB, which is Vanguard's S&P 500 index ETF. As the name suggests, it does invest in the top 500 or so companies that are in Standard & Poor's index. And it does have a quite low management expense ratio at only 0.08%. It does pay a distribution quarterly, and the 12-month yield for that hovers around 1%. Here, you are noticing remarkable returns for VFE. The 1-year return was at 27.45%. 3-year annualized return was at 22.68%. 5-year annualized return was at 16.62%. Just remarkable. And the return since inception of this fund was at 19.09%. The fund was incepted since November 2nd of 2012. Exposure from VFV is mostly to large cap companies with close to 82% of the exposure. All the companies' exposures are US stocks, and the largest sector that you're getting exposure to is information technology with 29.4%, followed by consumer discretionary, healthcare, financials, and communication services. We're going to take a look at the top 10 holdings, very similar to what we saw earlier on. Apple, Microsoft, Amazon, Tesla, Alphabet Class A, Nvidia, Alphabet Class C, Facebook, Berkshire Hathaway, and JP Morgan are among the top 10 holdings for VFV. And lastly, as promised, we're going to be taking a look at one ETF that gives you exposure to companies and stocks internationally. And this is no other than VXC, or Vanguard FTSE Global All Cap Index ETF, excluding Canada. Here, the management expense ratio is slightly higher at 0.21%. It does pay a distribution quarterly with the annual yield of 1.36%. The purpose here is to the extent possible, follow the performance of a broad global equity index that focuses on developed and emerging markets, excluding Canada. And you notice the return for this fund for VXC. The 1-year return was at 17.18%. 3-year return was at annualized of 17.19%. 5-year return was 12.65% annually. The fund has not been around for 10 years. That's why you don't have the 10-year annual return. It was in fact incepted on 30th of June 2014. Since that inception date, though, this fund has returned annually 12.21%. From an exposure perspective, you would notice that this fund is investing in 11,251 different stocks, and majority of them are large cap companies, close to 67%, followed by medium as well as small size that you get 8.80% exposure to. Look at the exposure by geographic diversification. You still get exposure to North America, excluding Canada. This mainly includes US, So close to 62% or 61% of your exposure is to the US, with the remaining exposure to European companies, Pacific, emerging markets, and a slight exposure to Middle Eastern companies. The breakdown by countries also listed out here. You see among the top 10 country exposures, you have US, Japan, United Kingdom, China, France, Switzerland, Germany, Taiwan, Australia, and India. And if we look at the exposure by sector, the top 5 include technology, consumer discretionary, industrials, and financials, as well as healthcare, based on the breakdowns that you notice on the screen. Lastly, if you look at the top 10 holdings for this fund, these include Apple, Microsoft, Amazon, Tesla, Alphabet Class A, Nvidia, Alphabet Class C, Facebook, Berkshire Hathaway, and JP Morgan. Very similar to the other ones that we saw for US, such as the S&P 500 or US total market, just given the size of these companies. But one thing you notice is the market weight. The exposure to Apple is much less, is only at 3.5% versus the S&P 500, where you had much larger weightage exposure to Apple or these top 10 companies. Just because here you're getting exposure to about 4,000 different companies, and as a result of that, the percentages is kind of broken down to much smaller exposure to these commonly traded and commonly exchanged companies that you see here. There you have it, folks. A quick look at 5 different exchange-traded funds that do pay a quarterly distribution, albeit it was not the highest distribution. Nonetheless, it does give you some distribution, but mainly they are intended for growth investors, those that do want to invest in the stock market and get exposure to stock market passively. And in the meantime, they want to choose quality, reliable ETFs that give you remarkable returns over the long span of time without having to go through the hassle of pick and choosing stocks or making any mistakes along the way. This is a wonderful way to get exposure to stock market. For me personally, while I do invest on the side in some stocks by picking and choosing, a large portion of my investment in my portfolio is actually passive investing by selecting quality exchange traded funds. And I'm actually invested in some of these ETFs that we've talked about here. Are you invested in any of these exchange traded funds that we talked about in this video? What other exchange traded funds have you heard of or you are currently perhaps investing in? I would love to hear from you. So be sure to leave me a comment down below and let me know what you think. I hope you found this video beneficial and you gained something of value from it. If you did, don't forget to give this video a thumbs up and share it with someone who might benefit from the video as well. And don't forget to subscribe to our channel. Here on Moementum Finance, we post every week several videos about investing, whether it's investing in the stock market, cryptocurrencies, real estate, as well as ways to reach financial freedom. With that, thank you so much, and I hope to see you next time.